Professor Siegel, of course, a long-time bull who currently and correctly forecast the Dow would have surpassed 20,000. So are we headed for 25,000 this year? Professor, thanks for joining us. Are we headed for 25,000?
Well, certainly we were very, very close, within 1%. But I think this is going to be a tougher year. I actually think that we may get a correction for the first time in a long time in the market. That's a 10% pullback. However, I think the market will end up between unchanged and up 10%. I think the biggest challenge is what's going to happen to interest rates. They are going up. We mentioned earlier on your program that Friday we get the jobs report. 190,000 is the estimate. That's more than twice the level that is being supplied by the population. That drives down that unemployment rate. Now, we're all guessing where it's going to actually spark wage gains. But some of the optimists think 3.5%, but we're going to reach that by the end of the summer at these wage rate gains, so payroll gains. So that's going to put pressure on the Fed. That's going to put pressure on interest rates. I think the effect of the tax increase has been brought into the market. I think that's why we had such a good market in 2017. So it's going to be tougher, I think, this year. But I'm certainly not bearish on stocks.
Well, if you're forecasting a pullback of 10% or more at some point and then finishing the year 0 to up 10%, you're essentially looking for more volatility. What catalyzes that volatility?
Well, I think, first of all, we're going to have a totally different political landscape this year than last year. The Republicans got what they want because they had 52, now 51 votes. But reconciliation is over. Democrats have to agree on any change coming forward. And this is a midterm election. Republicans are certainly behind in the polls. So the Democrats are going to feel their oats. They're going to go after what they want and can prevent the Republicans from really getting anything further on the agenda without Democratic approval. So we have a big flip politically. I think that's going to cause volatility, and then a worry about, how high is the Fed going to increase? Right now, the interest rate short term is above the dividend yield rate for the first time in about 8-9 years. So people are not feeling that urgency. I have to get into stocks. The Fed said the short rate will be near 3% by the end of the year. Some people will sit on that money. So it's not going to be so easy, I think, in 2018.